Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
Welcome back to the Gentle Art of Crushing It podcast. My name's Randy Smith, and I will be the host today. And I'm really excited to have a friend, Mark Doty, with us today. Mark is the managing partner of Doty Capital. Doty Capital is a private equity group in San Diego that focuses on ADU development, and they also do value-add multifamily projects. So, Mark, welcome to the show.
Thanks, Randy. Appreciate it. Looking forward to talking with you today.
Outstanding. Well, let's jump right in. Mark, can you tell the audience a little bit more about yourself, what you did before real estate, and what you're doing today?
Yeah, sure. So I've been in real estate development for about 5 years. I worked my entire career out of college. I grew up in the Midwest, went to college at University of Missouri, and then quickly got out of the Midwest after college, moved to San Diego, where I've been for the last 20 years. And the entire time I was in my W-2 job, I was working in various sales organizations. So started at the bottom rung in pretty difficult, challenging, not real desirable sales positions, and worked my way up through the ladder. The last 10 years or so, I was working in medical device sales, so making a pretty good income. But we were also like living through changing times in corporate America, which I think I think you can probably relate to that. Where one of the last mergers that we went through, I got promoted into a new job that I hated. I was making way less money in the new position, and I was like, I need to do something different. When I started thinking about doing something different, it was more like just on the side. And then like a bunch of other people, I read Rich Dad, Poor Dad. Kind of went down that rabbit hole of how can I make some more money and passive investing and all of that type. So while I was still working the corporate job in 2018, I did my first project. The first project that I did was in San Diego, and I turned a duplex into a triplex. And I went through every problem you could come up with permitting and contractors and hiring the wrong people. And I was doing it on the side while I was still working my job. And then about midway through that first project is when COVID hit. So that caused a whole nother onslaught of problems. So this project that began in January of 2019 ended up in more like January of 2021 after all of these different problems.
Wow.
But the bright side of it is that I was doing it as a BRRRR project. So I rehabbed 2 units and then turned the third unit into this 2-bedroom, 2-bath apartment that had just been a room addition. So I walled it off and then converted it, had it done with permits. And then at the end of the day, we executed the BRRRR strategy. So I put all the capital into it, got all the capital back, and then had a cash flowing property in San Diego. And I was like, whoa, this works. I can do this.
Yeah.
Even with all of the problems that I went through over the course of those 2 years of doing that first project, everything worked out at the end. And it was like, if I actually was good at what I'm doing and learned to get better, this can work. So I did another project where I went through the whole entitlement process, which is definitely a process on anywhere, but especially in Southern California, to go through the city and entitlements and drawings and all that stuff. Did another project, and I was like, okay, I think I've got my proof of concept, and I'm going to do this full time. So got my wife on board. I had just had my third kid when I started doing this. So I've got 3 little kids. They're still all in elementary school. So I've got a house in San Diego. I'm married, 3 little kids. I was working a pretty good sales job when I decided to do this, and then quit it all and just decided I wanted to be my own boss. And then now it's 3 years later, and things continue to go well.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
That's fantastic. Fantastic. So, and you've done some pretty big projects too. I was, doing my research before the podcast, and you've done some very large projects as well, correct?
Yeah. I mean, I'm in the middle of the biggest project that I've done so far, where I'm turning a single family house into almost 30 units. So it's going to be a big ground up construction. It's the first one where I've been able to really like officially raise money with a 506c syndication. So that's a bigger project, but it's a mid-rise. It's also in San Diego. All the projects that I've done have been in San Diego. They've all been in the range of very heavy value add to ground up construction. So that's kind of the space that I found that works in Southern California, because I want to be able to do it here.
Okay. Yeah, no, and that makes sense. I think a lot of people do projects out of state, which has the obvious challenges of doing that. San Diego, having spent some time there myself after leaving the Midwest, I know how expensive that can be. Yeah. So there's a huge affordable housing issue going on out there. So now I know that you've done some work around ADU, and we've not talked about ADUs on this podcast before. So can you tell the audience what is this ADU strategy that you were talking about, or that you focused on?
On the big, absolutely. On the big picture, you're totally right. There's a housing crisis. California has it worse than most states, and San Diego specifically has all of these geographic borders that prevent you from doing any kind of urban sprawl or going out into the suburbs. You've got the Mexican border, mountains and deserts to the east. The Pacific Ocean obviously is in the west coast. And then we have this massive military base that's on the north of San Diego. So you can't really grow outside of the city limits. So the laws that have been passed recently in the last 3 years have been around using the existing infrastructure, the plumbing, the electric, to be able to do infill development. And what they've termed that is you can build accessory dwelling units, or ADUs is what they're called. And you can build them on existing lots that traditionally have only had a single family house or one unit on the properties. And you can expand that on most properties up to 4 units. And then depending on the different zoning and, some other nuances that we could get into, but you can do much more than just the up to 4 units if you have the right zone. So what I've done is really focused on finding lots that can maximize some of the larger density areas, and then been able to add units. So what we do is we bring investors in. They make great returns on the passive income, and then we also help with the housing shortage. And we work with the city of San Diego that's trying to increase these units. Kind of like it all merges together and works nicely.
Very good. Very good. And so do you hold these assets for the long term, or do you sell them once they're complete? What does that process look like?
It's both. Ideally we hold on to all of them, but it just doesn't always work. So sometimes we'll sell. Our methodology is probably to sell, probably to hold 1 out of 3 of them. So I've got a small portfolio, but usually most of the time it's build to sell. I'm
trying to think. Like I've been fascinated with this infill development idea. When you look at the zoning, I suspect you're looking for currently zoned, ideally, assets that allow you to go multi, or are you specifically looking for single family zoned residential, single family that you then want to go out and get rezoned? Is there a preference there? Or?
It's funny. It's really like the answer is simple. It depends on how much you want to build, but ideally what you're looking for is a small house on a big flat lot.
Okay.
So, that is the main criteria, because on almost all of those, you can max it out at 4 units. But then if you take it a step further and you find an asset that's near a bus stop or a trolley station, that would put it in a sustainable development area, which which just means that it's right by public transportation. And when you have public transportation, you can increase the zoning even more. Yeah, and there are nuances that you can increase it by adding into the sustainable development area. But there's also, if you layer that on top of multifamily zoning, it is really where you can really create like what I'm doing. What I'm doing now, turning a single family house into 30 units, like that sounds ridiculous. So it's probably like a foreign concept in most of the country, but it's very doable if you have the right overlays for those components of the zoning.
Okay. And so I'm assuming, like, are we seeing these units getting smaller and smaller and smaller? Or are these still, 800,000 square foot apartments? Are they, what does the average size unit in that 30 unit look like?
The 30 unit that I've got is a combination of studio apartments that are right around 400 square feet. So on the smaller side, but they're not 200 square feet, which other developers have done.
Wow.
But they range in size from about 400 to 630 or 660 for a 2-bedroom, 1 bath.
All right. And so, we're seeing a trend there. Let's say you've got this 2-bedroom, it's 2-bedroom, 2-bath or 2-bedroom, 1 bath.
2-bedroom, 1 bath, 660 square feet.
And what do those rent for in San Diego? Just curious. And the build cost on these, what are you building units for? Like, is it a per square footage or is it a per unit that you look at generally? Or
it's about 160,000 per unit, or $325 to $350 per square foot.
Wow. So 165 per unit, and you're renting for 2,400. Just the simple, 1% rule that actually satisfied. It's amazing to think that you can do that in San Diego for as cheap as you're doing that. Honestly, I feel like, 160 some odd thousand. That seems relatively cheap. So now
that's in working class San Diego. So this is in a C area. If you're doing this in La Jolla or Claremont or some of the higher, more affluent areas of San Diego, you could be building for, let's say, $350 a square foot, but your value when you're done can be $700 and up to like $1,000 per square foot, and that's very realistic in San Diego. So the concept is if you're building for $350 and they're worth $700, do as many feet as you can.
Yeah, absolutely. That's amazing. So how did you find this space? Is it you're a sales guy? You're obviously a creative guy trying to find an angle. How did you come across this? Did you see somebody else doing this and you've mirrored what they've done, or did you just say, "Hey, there's a plot of land, I want to throw some property on"?
Well, it was a little more strategic than just finding a plot of land. I was looking for a strategy that would work in San Diego. Initially, I was going to do out of state value add apartments. So I went to school at Missouri. I'm very familiar with the Kansas City market. Kansas City is like a lot of Midwest markets where you'll get cash flow on properties, where San Diego really isn't. The BRRRR strategy is not like an easy, just find a really cheap property, do all your construction, and then you can do a refinance. It doesn't. The metrics don't work like that because of the price point.
Yeah.
So I was looking for something that would work. And while it's difficult in this super competitive market to be able to buy at a super high discount, what I found is on the other end of the BRRRR strategy is if you can increase the value as much as you can by adding units, that's where you're able to refinance at the end, because you've increased it so much. You didn't necessarily buy it at these massive discount, but you're buying it at the price at like market rates for a single family house, but you're selling it at market rates or refinancing at market rates for like 4 units or 6 units.
Yeah.
So you're exploding the value at the end more than buying it at a discount. When I started doing this, they hadn't passed all the new regulations. It was still like based on it was based on an older laws. But then in like 2020 is when the state of California and then the city implemented the new ADU regulations. So I'd already gotten my nose bloody on that 2-year project, and then they made it so much easier. And and that's where it's really caught traction in the market.
Yeah. So the light comes on and you're like, oh my goodness, there is a huge opportunity here. And none of them are going to be as difficult as what you had just gone through with all of the challenges that you had on COVID and all the other issues. It's funny. It sounds like you and I were kind of going down this path at the same time. I was doing Burr, but I was actually doing it in Kansas City and doing it in Atlanta. And then I decided to move up to larger multifamily in Atlanta and quickly realized like I've got no business doing that. So I just started investing passively, and that's kind of how my journey went. So this show is geared towards the passive investor. Mark, why don't you, if you can you walk us through your current offering for investors and tell us what that might look like if folks are interested in partnering with you?
Yeah, absolutely. Thanks for asking. So right now I have a project where I'm taking a single family house and it's on a big lot that's zoned perfectly for multiple ADUs. And our plan is to take that lot and develop it into a mid-rise apartment complex of almost 30 units. And I've set it up as a syndication. It's for accredited investors only. It's a 506C syndication, which is a part of Reg D. But it's all been set up with an SEC attorney. And the idea is that we're going to convert the main house into a 2-bedroom, 2-bath. We're going to convert the garage to start the process while we go through our entitlements. And then once we have our plans drawn up and approved by the city of San Diego, we'll go ahead and start doing ground up construction for this 3-story complex that's identical to the building that's right next door. So we know that it's possible. And it's just a matter of going through and raising the capital for the construction funds and then doing the build. The project should take us about 3 or 4 years. And we're looking to raise increments of $50,000 or more from investors who should expect 20 to 25% annual return on their money. So the plan is to sell it at the end of the project, and then find another place to do the same type of thing here in San Diego.
Yeah, interesting. So there's a single family home, and I'm guessing, I'm trying to picture this. Is there like a big amount of land that's behind it on this plot, or what does the property look like?
Yeah, it's like that, but it's the opposite. So it's this really pretty front yard that's enormous. That's got all these like very nice vegetation that's in the front, but then this little tiny house on the way back edge, and
interesting.
It's right next to a bus stop here in San Diego. So it's got the size and multifamily zoning that will allow us to really max out the density according to the new regulations here in town, and that's what we intend to do.
Interesting. So, like, will you keep like a small driveway on the side or something, or will you tear down that house as part of the build process, or what does that look like?
No, we're actually not tearing down the house on this one because it is all the way at the edge. There will be like a walkway, but not a driveway to the house. So one of the conditions that make the property ripe for the ADU regulations is that it's in this transit priority area or sustainable development area, and it doesn't have parking requirements. So we don't need to have a driveway. We don't need to have any parking for the tenants. And the concept is that they'll rely on street parking, which is somewhat available, and then also from the city's transit.
Interesting. Okay. So, and that will be kept and parceled as part of the sale when you sell the whole thing. Will this single family unit will be included with that as well?
Yeah, that's our primary exit strategy would be selling one property all under one listing. But there is an option. There's like a new regulation in San Diego that allows you to do a condo map and split things up. But it's still brand new, and they're working through regulations. By the time our building is done, that may be an additional exit strategy to sell the house with the garage conversion as one unit, and then the 27 unit apartments as another unit. It's possible, but it's not option A, just because we're not sure how the regulations are going to shake out over the next couple years. But it's possible.
Interesting. Okay. Yeah. So essentially, you take all the learnings from all your other projects that you've been doing for a number of years, and it really kind of culminates into this kind of a twofold piece where you're going to do essentially what you've done a number of times with that single family, and then you're also going to be developing this. Now, is it 30 units of development, or is it only going to be 28 or 27 because the single family includes a portion of those as well?
So we bought it as a single family. We're turning the single family into 2 units, and then we're building 27 additional ADUs in that big front yard.
Got it. And so they're treated separately as separate ADUs, or like an apartment complex for the 27?
There's really no difference, Randy. It's like,
got it. Okay.
I call it an ADU because that's what the regulations say it is. But you could absolutely not tell the difference between a 3-story apartment building and what I'm about to build. It's the exact same thing. It just falls under different regulatory to get it approved for that quantity.
Got it. Okay. Very good. Yeah. So investors can expect to get 25% return on their dollars. We're actually helping to solve some affordable housing issues there in San Diego as well, and improving density. So we're just really, you're actually answering a lot of questions, not only for your investors, but for folks who are trying to find affordable housing in that area. Fantastic. Very cool.
I mean, you hit it right on the head. That's exactly what it is. It's not an income generating project. So it's not for the investor who's like looking for a cash on cash return that they're going to be able to pay their monthly bills with. But it is for someone who's a busy professional, who's looking to make a little bit on the side, but doesn't want to do any of the work on their own, and who also wants to do some good in this community.
Yeah, I love it. So when I first got into the passive investing space, I remember that whole idea of, are you a cash flow investor or are you a growth investor? Honestly, at the time, I didn't even really know. I knew at the time I was a high income W-2 sales guy. I technically didn't need to make any more money at the time. My goal was really just trying to grow. I called it this retirement bucket, but this bucket of money that I was trying to grow as fast as I could. Because the sooner I could grow that bucket to a certain level, the sooner I could step away from my W-2. So it's really geared towards probably high income folks that don't need cash flow, that are really just trying to grow wealth, which is a very specific type of avatar, very different than the person who's trying to, replace their W-2 income so they don't have to work immediately right away. These are folks generally that have good income, correct?
Yeah, absolutely. I mean, it's not geared for the person that's looking to break away and they want to use this as their full-time income. It's really geared for somebody who's already got a good day job, but they've got a pile of cash that they want to put to work, and they don't need to see the returns immediately, but they want to see returns. So they're trading a big ROI at the end of the project with seeing quarterly checks.
Okay. Well, and so because I believe this is the first time you're raising from investors. So can you talk about what the cadence of communication is going to look like? What can investors expect to get? Like, are they going to see quarterly updates or biannual updates? What's that going to look like?
So far, I'm almost a year into it, and I'm doing quarterly updates. It's not a lot of updates right now. In this kind of project, you rush in the very beginning to get the house stabilized, so it's covering all the holding costs, and then you draw plans and you submit the plans, and then you're just sitting in there and waiting for a year. So I'm going to do quarterly updates as we're going through entitlements, but nothing's really happening. You wait a lot, and then the city gives comments a couple times over the course of the next year, and then the plan gets approved. And really, that's when you start to see noticeable things. You're digging holes in the ground. You're starting to build the foundation, building scaffolding. It's a little bit different, but a lot of this kind of project is waiting for the city to do its what it's supposed to do for the entitlement process. But in the meantime, I'm issuing quarterly updates.
Okay, perfect. Yeah. And investors can expect, like, for the first year, it's really going to be like still waiting on entitlement. Basically, it's going to be the update, right?
Yes. Yeah. So anybody going into this kind of project has to be like, if a month goes by and nothing happens, it's because it doesn't happen that fast.
That makes sense. That makes sense. So now I know a lot of people like to invest in this, in real estate specifically because some of the tax savings. Will there be really any tax benefits to this since it's development? I can't imagine you'd be doing cost segregations, or is that part of the plan as well?
If it turns around and we decide that we're going to hold on to it a little bit longer, a cost seg would be in the future. But you're right.
Okay.
There's not a huge benefit, that I'm aware of in the first few years. So
Okay.
because it's got a lower purchase price compared to what the value is going to be at the end, we're not promoting really a lot of the cost, not the tax benefits that you bring up at this point on this project, because it's like we do a cost segregation, you'd get this big deduction on your taxes, and then we'd sell and you'd have to recoup all of it. So it doesn't make a whole lot of sense on this particular project, unless things change, which sometimes they do, but that's not really the plan of this one.
Yeah, this is a development and sell, short and sweet, very quickly try to double your money plus in that time period. Very good. Okay.
Yeah, short and sweet as in like 5 years, double your money.
Right.
Right.
Exactly.
So it's definitely not. This is not an investment for everybody. Some patience is required in development. Just like flipping a house, even if you're going to go that basic, there's always going to be problems and hiccups. And any kind of development project, it's not unusual to see delays when you're working with any kind of municipality. So it's for an investor who's aware of that type of thing and is willing to be patient, because at the end of the day, there is a nice payoff, but you have to wait through.
Yeah, fantastic. So, yeah, it sounds like a really, really cool project. As I mentioned before, I am a huge fan of infill development. It solves such a neat need for us, and it's a type of project that an operator like yourself, who's got a lot of experience in doing the type of projects that you do, this is the obvious next step for you. And I'm sure there's going to be a ton of learnings, and I imagine it'll be just a matter of time before you're looking for that next project and looking for more investors on the next deal as well. So, what is the next few years in addition to this development project? What do you see the future for Doty Capital?
Yeah, that's really what we're doing. This is a bigger project than we've done in the past. It's been small multifamily when we've done these projects before. This is a bigger ground up construction, and the idea is to do more projects like this, get our proof of concept, and then go for bigger developments, go for more projects at the same time, and just scale it up. I like the regulations. I like our ability to work in the San Diego market. So none of that is going to change, but we're just looking to do more of the same type of thing.
Well, very good, Mark. Yeah, this has been an interesting conversation, and appreciate your flexibility. We had some technology changes there, but if you do still have a few minutes left, I have a handful of questions I'd like to ask everybody before we wrap up the show.
Yeah, man, absolutely.
Awesome. Well, let's, this is geared towards the newer passive investor. So from an education standpoint, do you have any educational resources that you generally suggest for newer passive investors, whether it's books or podcast or any other materials that you suggest folks to learn more about this space?
Yeah, I mean, what I did is I spent a year listening to all of the Bigger Pockets podcasts. I mean, that's a start. Podcasts like this one are great just to get really you start to balance out what you're hearing on different shows. And when you start to hear the same types of concepts over and over again is where you really start to like understand, okay, I do know what I'm talking about. So just that's what I did when I was driving around, because I had a job like yours. I was in outside sales, and I would spend my time, sucking up as much knowledge as I could on the market as possible. But I think like if you're a passive investor and you're looking to get into the space and you want to figure out operators, I think one of the barriers to entry is that there's a lot of jargon in the industry. They talk about cap rate compression and the amount of leverage and mezzanine debt. And I think when you start to understand what those things really mean and what the operator is trying to do to increase the value of the property, I mean, I think that goes so far in your ability to evaluate the guys that are pitching you these projects. I thought one of the best books that I read in the very beginning was Crushing It in Apartments and Commercial Real Estate by Brian Murray. I thought that book did a great job of simplifying some of those complex topics into bite-sized chunks that I remember reading that being like, the light bulb kind of went on.
Yeah.
I understood like what the guys were trying to do. So
Love it. Yeah, great advice. I read the book years ago. I need to actually go back and revisit that one. But I think you're right. It was a really good explanation of the nuts and bolts of what you guys are doing. So yeah, good example. Thank you. We spent a lot of time in talking about due diligence. So I'm curious, do you have any due diligence questions that folks should be asking specifically in this either ADU or infill or development space? We've focused most of our time on value add, so unique questions about this space would be really, really valuable.
Well, like when you get to like creating the value in apartments and with the ADU space, it's not that different. But what sets it apart and like what you have to understand to be in this part of it, the ADU part of it, is just understanding the zoning. So if somebody can dive deep into what kind of projects they're looking for, what zoning makes that possible, with that zoning, how you do the calculations on how much you can build, like all of those are crucial parts of being able to figure out if you're just looking at adding one unit or if you're looking to add 27. In this case, there's a big difference, and it's not rocket science, but you have to have somebody who's going to go in and read the code and understand what the codes mean and how you can utilize those to maximize your project.
Yeah, no, absolutely. The whole zoning piece is something I've not ever paid really any attention to. I've heard about them. I understand that things are zoned in a certain way, and that's what dictates like how many units you can put on a specific piece of land. But I've always been intrigued with this idea of going down to the zoning meetings that I hear people talk about to really understand what's going on there, what type of exceptions do you need to get? What is the city really trying to do? Because ultimately you're trying to partner with the city to solve their problem, it seems like. So if you can figure out whatever it is that they're trying to solve and find a solution for that, then that's going to be a good option. So yeah, good question to add to the arsenal with the due diligence piece. So couple of fun questions here. You and I are both part of a community of guys who like to live life big. And one of those facets of that business that community is bucket list adventures. So I'm curious, do you have a recent bucket list item you've checked off your list or one that you're hoping to in the near future?
The community that we're part of pushes us to try to improve the I don't know, the cool, not the cool factor, but like the scale of your bucket list. So I would go from like an example of what I mean is like earlier this year, my oldest son just got tall enough to ride all of the roller coasters at Magic Mountain, Six Flags on the north side of LA. So I took him up there to spend a day, which is something I've been talking about with him for like 3 years. So finally getting to do that. So that's like one version of a bucket list thing that was cool, really just for me and my son. But I've scaled that up a little bit to the point where like next summer, I think our whole family of 5 is going to spend a month in Europe. So that's like kind of a different change. And I think a lot of that has to do with the input of we're in GoBunded. So the mastermind that we're a part of has kind of pushed to, have bigger trips with the family. So that's one of the things that I'm putting together now with my wife, which is fun and a little scary.
Yeah. I bet. I bet. Yeah. Good for you. I'll mark it on the calendar and circle back to hear about it next year. That sounds amazing though. Like awesome. I've had the same experience. Like I've had my lifelong bucket list items and they're getting to be a little more elaborate than what I've had in the past. So nothing like joining with other folks that have similar background and experiences to try to push each other. So very cool. Good for you.
Oh, yeah. Thanks.
All right. And then final question I like to ask everybody is if you had $100,000 that you had to invest in the next week or so, but you could not put it in your own deal, where would you invest that money?
What I think the best thing to do is to find an operator or mentor that you want to learn from and invest in their deal. I think that's the truest way to like align with somebody else who you want to get to know better, and you like the idea of the projects that they're doing. And by investing with them, I think you get a deeper, maybe not a deeper relationship, but you get a different kind of relationship with somebody that you're partnering with. And I've done that personally, and it's worked very well. And I've learned a ton from the guys that I've done that with. So I would just find another operator who I wanted to get to know better and invest in their projects.
Love it. Love it. I've not ever heard that answer, but I agree. I always share with folks, like, if you are getting into this space, you need to get some money at play, and that's when you're really going to start learning. You can listen to podcasts and read books all day long, but you really don't start learning until you wire your first wire and watch those monthly distributions or quarterly distributions and those updates coming through. So yeah, really good advice. Yeah. Really good advice. Yeah. Definitely. Well, very good. Well, Mark, thank you so much for coming on the show. This has been an educational experience for me, and I'm sure for the listeners as well, but this has been a lot of fun, Mark. Thanks so much for being on the show.
Yeah, Randy, thanks for having me on. It's been great.
Awesome. And to the listeners, as always, we encourage you to continue your education journey in the passive investing space. But more so than that, we encourage you to make a decision to make a first investment in the passive investing space. We're convinced that once you do, you will just wish that you had started that much sooner. So as always, thanks so much for joining us today, and be sure to join us again next Thursday for another great episode. Thank you.
Well, there you have it, ladies and gentlemen. Another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.